Hello everyone, this is the pre-market report video for today 29th March 2023 in terms of Nifty and Bank Nifty. As most of us know, but just a reminder, today is the monthly expiry day and also a financial year's expiry day. Anyway, let's get into the topic. Yesterday, Nifty opened a gap up of 45 points and quickly it moved below 17,000 and most of the day it traded very small band like between 16,950 to 17,000 but with a negative bias, and thus it closed negative of 35 points and near 16,950. Yesterday, for the second consecutive day, index outperformed the overall market. As I said in my last pre-market video, day before yesterday, the advance weekend ratio was 1:3, which means for every one stock advance, 3 stocks were declined. Now, yesterday, the ratio was not so different. It's just 1:2.5, which means for every one stock advance, 2.5 stocks were declined. In a way, it's kind of understandable. This week is the financial year expiry, so most of the FII and DII will be and already might adjust their position by selling the non-performing stocks so that they can reduce their capital gain tax by booking the loss. And also, that's the reason I'm kind of bullish next week, since all of a sudden there will be a huge reduction in sellers. But I may be wrong, it's just my opinion. Next week might be a complete disastrous as well. However, just for info, last year same time was no different to the present situation. FIA was selling non-stop and the escalation of conflict and confusion about winter in Europe like that. Even after all this uncertainty and escalation, last year, first week of April, Nifty increased over 700 points in 1 week. But after that, it started to fall in the next 3 weeks of April. That's a different story, but for now, just remember, last year first week of April was so bullish. Let's see. Back to present. Yesterday, other than metal, all the sectors closed in red. However, FII turns net buyers. They net bought shares worth approximately 1,500 crore rupees and DI net sold shares worth approximately 150 crore rupees. Anyway, moving to the US market. Last night, there were 3 things in the US market that sets the confusion tone. First, Consumer Confidence Index data. The Consumer Board released the monthly data about the level of confidence that the consumer have in the economic activity of the country. Every month, most of the time, this data will have an impact on the stock market, since this is kind of an earliest indication of US economy and inflation, as it's directly related to consumer spending. The data comes as 104.2 and it is way higher compared to that of the what market forecast. This increased the 10-year treasury bond yield to near 3.57 and thus affected all the tech stocks negatively. Then the second one, last night Fed Vice Chairman Michael Barr testified before the US Congress. He spoke very neutrally and mostly explains why Silicon Valley Bank failed rather than talking about the US economy. So market is kind of neutral and waiting to this, as there is a schedule for him again today to testify with Congress about economy, inflation and interest rate. Thus, this created the indecisiveness. Then the third one is regarding oil. As I explained in detail yesterday that Iraq stopped the oil supply of over 5 lakhs barrels per day to Turkey. This again increased the oil price. At the time of this video, Brent crude oil is trading at $78.5 per barrel and WTI crude oil is trading at $73.5 per barrel. This made the US energy stocks very bullish. So, 1 positive, 1 negative and 1 neutral info. However, all 3 US major index closed negative. Dow Jones decreased very marginally by 0.12%. Again, S&P 500 marginally down by 0.16% and Nasdaq declined 0.45%. Finally, US VIX crashed 3% and moved below 20. Coming to Indian ADRs in US market, both the banks closed positive of 1%. However, both the IT stocks down by near or above 1.5%. Regarding SGX Nifty, at 3 am Indian Standard Time, for today's expiry, it closed at 16,996. So it's kind of indicating again 40 to 45 points gap up opening. So this is what happened last night in global market. Now coming to India related, yesterday there were a couple of negative news about Adani. First during the market hours, there is a business news channel called The Ken. It's an India-based news channel, not the foreign-based one, raised the questions about Adani's claims of repaying $2.15 billion loan. Since they cited there was no stock market filing from nobody regarding the loan repayment. This kind of made the Adani share to fall 5 to 7%. Then after that, Economic Times released the report stating that Adani Group is negotiating the loan repayment worth $4 billion that they taken last year to buy ACC and Ambuja Cements. As a overall, it's kind of frustrating and this Adani issue won't be over from Indian market. Moving on, yesterday, Indian government selected 11 companies to manufacture near 40,000 megawatt of solar panel, and in that, the list includes Reliance Industries, Tata Power and JSW Energy. So it's positive for those stocks. In another sense, which means Reliance is officially entered into the solar panel business as well. Then the third info, yesterday rating agency Fitch released the comprehensive report about Indian companies and government. They said and they expect that Indian companies to have capital expenditure of 10 to 12% in the next upcoming financial year. This is kind of a good news since most of the countries, they got the reduction of capital expenditure. As a summary, US market closed negative and IT areas kind of crashed in US market. However, SX Nifty indicating 40 to 50 points gap up opening and banks Indian areas showing some positivity. Coming to technical, compared to yesterday, Nifty forms a bearish inside bar candlestick formation. Again another indecisiveness candle. However, Nifty has been in the same range of 16,850 to 17,200 for almost continuous 11 trading sessions. Especially in the last 3 days, it took the support at the same place 16,900 and it haven't passed through 17,00. Now the range kind of shrieked from 16,850, 17,200 to 16,900 and 17,00. So it's kind of indicating that there will be a likely breakout. The $1 million question is which side? At present, I'm betting on upside. Yesterday I bought the call option strike price 16,850 for 27th April expiry at 412 rupees. If I get the good return today, then I might square off today or on Friday. Again, I'm just informing for information only. Please don't make any investment decision just because I am buying. I'm just experimenting my theories. Anyway, coming back to the market, Bank Nifty 2 forms a inside bar candle formation. But compared to Nifty, it's just a bullish candle, and if you consider a single day, then it forms a doji candle. Again, here too, the trend was not decided. It's too in the range of 39,000 to 40,000. So breaking the either side will set the trend. Since today is the monthly expiry and the financial year's last expiry, there is a high chance that breakout might happen today. I'm hoping it to be on the positive side. Let's see. In case of moving average and technical indicator, it's same, no changes. For both Nifty and Bank Nifty, at present, everything on daily chart is a strong sell signal. Turning to options, for Nifty, first from option change in open interest, almost very few put option open interest were added and significant number was unwinded between 17,000 to 17,300 and huge quantity of new call option open interest added above 17,000. It's difficult to make any conclusions based on this data. So from overall options open interest data, 17,000 got the huge short straddle and 16,800 got the maximum nearby put option open interest followed by 16,900. So 16,900 is the immediate support today and 16,800 is the strong support for today's expiry. And the maximum nearby call option open interest after 17,000 is present at 17,200 and thus 17,200 is the strong resistance. For Bank Nifty, based on change in open interest, it's really very weird. Some small quantity of put option unwinding took place at 39,500, whereas maximum new call option open interest added at 4,200. Again, it's hard to draw any conclusion from this data. However, based on overall open interest, we can see that the 39,000 level will be the strong support for today and the 40,000 level will be the immediate resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.